Welcome to Trading Nation. I'm Mike Santoli. Stocks deep in the red on Monday as the strong dollar, trade jitters, and weakness in the tech sector weighs on investors. Could this sell-off be signaling that we're headed back to those October lows? Bob Dahl is chief equity strategist at Nuveen Asset Management. To discuss that a bit, Bob, good to see you again.
Hi there, Mike.
So, you know, we're still in this thing, whatever this thing is that we've been in for a couple of months. Obviously, market has been very volatile, chopping around this area. What do you think the main issues are that this market is trying to grapple with? And do you think we've discounted them, or do we have to revisit those lows?
Well, you alluded in your opening to technicals, and I think that's what makes sense in these bull market corrections. We had the rally off the low, and it did not have a lot of confidence and conviction. Breadth wasn't great. Trend and other more technical measures weren't so good. And so I think this is the retest sequencing. Whether we have to go back to the lows or a new low or marginally higher, who knows? But the fundamentals that investors are working with are, gee, how far is the Fed going to go? What's the trade situation in China? How long will earnings growth stay strong, et cetera? And all of that's kind of come at once, and therefore it's haunting the markets.
Yeah, I mean, it's interesting because a lot of those things have at least hovered in the background for most of this year as earnings have been very, very strong, but yet the market hasn't gotten, you know, escape velocity. The rest of the world had its issues here. Where do you come down, though, on whether, in fact, we have to be worrying about this cycle itself, this economic expansion coming to a close before too long?
I think the cycle is fine, Mike. I think it's going to last. The issue, I think, is investors got ahead of themselves about how long strong earnings growth could continue. You know, when the market was rocketing higher post-Labor Day, no one had said it out loud, but it was sort of like this 20% earnings growth. Maybe it's going to last forever. Now I hear people saying, well, we're going to have a retrenchment to plus 10 or 12. How awful. Well, the long-term earnings growth in the U.S., as you know, is 6%. So 10 to 12 is still an amazing number if we can get it. And I think that's what the market's struggling with. Unless we have further margin expansion, we're not going to see 10 or 12 next year because there are some cost pressures, wage rates, transportation costs, raw materials, most of that unrelated to China, but some of it related to the China tariff situation.
So would you view us, I guess, in the somewhat short term as just captive to whether we get any progress on the China front, perceived or otherwise, and whether the Fed blinks, or can something else take the market's focus away from those things?
I think those things are going to be stuck with us for a while here, Mike. As I've said on your show before, I don't think we're going to see a new high this year. I think we're going to bounce around. Of course, from here to a new high is quite a nice rally. I think we're going to bounce around with a lot of sidewise volatility, and therefore, when they're smacking them down hard, you got to have some stomach and go buy some. And when they've had their big rallies, you can let some go. It's more of a trader's market.
And then where do you think you might make it might make sense to be positioned within that? Has the market just in all this jumping around sort of knocked loose some value in your mind?
You know, so the characters I'm looking for as a portfolio manager to put in my portfolios, I want them to still benefit from the economy because the cycle's not over. I want free cash flow generation. Don't show me too many cash users. I want companies that benefit from the tax bill. That means they're more domestic in orientation. Benefit from higher interest rates. And you put all that together, it leads to a higher quality portfolio than you had before. You know, healthcare services, some of the HMOs, they're geared toward the economy. They're generating cash flow. That's the kind of name that I think makes sense in this environment.
All right. Yep. There's that quality trade a lot of people are focusing on right now. Bob Dahl from Nuveen, thank you very much. I'll see you again soon.
All the best.
And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.